Now, today's market activity, along with yesterday's stock sell-off, suggests that investors are running from risk. John Ehrlichman has been following that story for us. John, certainly a reversal from the earlier trend.
Absolutely. You just talked about that emerging markets index, the MSCI Emerging Markets Index, which is down more than 2% today. Its biggest drop in more than a week, and now down more than 10% for this month. We talked yesterday about what we were hearing from the World Bank. Materials names within this particular index taking a hit today, and that continues the theme we saw with the S&P yesterday, which was down more than 3%. But the context, of course, is the rally that we had seen in indexes like this between the months of February and May, a run-up over that period of about 55%. One of the other interesting stories, Scarlett, that we were talking about yesterday, the VIX Volatility Index, which was up more than 10% yesterday. A lot of people pointed to that. But what was just as interesting was the options market activity related to the VIX. August calls, options to buy the VIX at 47.5. You can see where it's trading right now, just above 31. But to buy it at 47.5 were the most active contract yesterday, and the price for that contract on a one-day basis up more than 20%, which would suggest to some that there's a little fear out there.
Right, absolutely. More volatility to come. Now, given all this, does this bode well for the auction today, then, of the two-year Treasury notes?
Of the two that you mentioned. Well, this is the biggest of the bunch. We know that. This is a $40 billion two-year auction in a week where we're going to have more than $100 billion in auctions. The 5s and the 7s will follow this two-year note auction overall. We do know there is still an expectation from economists polled by Bloomberg that you could see the two-year yield rise as you move later into the year. As for what's going on with the 10-year, we should note, Scarlett, that overnight Goldman Sachs saying they still think 10 years, longer dated maturities have a little ways to go. They've been long 10-year Treasury futures right now, and they think yields could be coming down. That is somewhat in line with what we're hearing from economists in terms of where the 10-year yield could be at the end of the third quarter.
Okay, thanks very much, John Ehrlichman.